asking the relevant questions. I have just figured out the answer to my first 3 questions. All right, what is up, guys? Welcome. My name is Brandon, also known as Ikata Trading, and I am going to show you something that's quite interesting. I believe, at least in my opinion, I believe this is quite interesting. And we're going to talk today about asking the right questions. So I see this a lot of the time with new traders and even experienced traders. Traders tend to try to trade candlestick patterns, right? Meaning they look for the 3-line strike, or maybe they might look for an engulfing candle or whatever. And these things they have their place, they're valid, right? And for some time that I would have used engulfing candles, but I'm never using engulfing candles by themselves. I'm never using anything by itself, because obviously the more data that you have, the better your analysis can be, right? I mean, that's only logical, right? The more data you have, the more things that you can take note of or keep track of, and obviously your analysis is going to be better. Now, the concept that I'm going to talk to you about today is asking the right questions. And why do I say this? We must understand that I want you to think about a polygraph test. You know what a polygraph test is? Where it's like a lie detector, where they hook you up to these meters and heart rate monitors and all these different things to keep track of little movements, little twitches, maybe little beats in your heart. You understand? Sweat changes. Maybe, they're measuring certain characteristics about your body, right? To tell if it is, you're lying or not. And I could tell you that the market is taking a polygraph test every single second of every single day. Why do I say this, or why am I saying this? Is because the market is showing you its entire hand all the time. Once a candle closes, that's it. It's done. They can't do anything about it anytime after that. It's done. It's set in stone. Therefore, the market has no choice but to tell the truth. The thing is, most people say that, oh, the market lied to me. It said that it was going to go up and it really went down. No, you just didn't ask the relevant questions. So what I tend to do is I tend to ask a lot of questions of the market. And once you ask the relevant questions, you're going to find that you're going to get the answer, because again, the market is constantly taking a polygraph test, and it has no choice but to tell you the truth. So let's explore this concept a little better. So obviously, if you have watched my YouTube video on the ECR, and this is somewhat of some technical analysis, but it's more psychological, and obviously everything I'm telling you here has a lot to do with, how you perceive the market. Me personally, I am very, very lazy. I say it all the time. I'm looking for the simplest way to achieve the best possible result, right? And what I'm doing, I'm asking 2 questions. Does the market look like it's going to reverse? No. If it does, then most likely it looks like it's going to continue. Yes. Cool. So how do I discern this? I've just asked 3 questions. Did it look like it's going to reverse? Did it look like it's going to continue? And how am I going to figure that out? Just like that, I've asked the market 3 questions. The market has no choice but to answer. So what is a reversal pattern? What do we typically look for? Nice. We are looking for an M pattern at the end of a bull trend, because we know an M pattern is a bearish reversal pattern. Or we're looking for a W pattern at the end of a bear trend, because we know a W pattern is a bullish reversal pattern. At this point in time, right, let me use the replay function here so that you can see it, right? But at this point in time, right, this was right here. This is what we had, right? This is what we had. Now, I'm asking, does this look like a clear M to me? No, it does not. It looks like this. That's not a clear M. I want my 2 highs to be equal, or the second high to go just a little further to show that the second high stop hunted to that of the first high. So I'm asking relevant questions. The question that I'm asking in this case is this an M? And looking at it, my answer to the question, based on what the market is telling me, is no, it is not an M. Therefore, automatically, the rule says, if it's not a reversal, why should you go against the direction? The direction in this case, what is the direction? How do we figure out what direction should we be going? Overall, over the last few days, I would say since the 8th of March or so, GBP JPY has been bullish. In fact, it created something of a possible macro trend here, and then it actually started to create a little micro trend within the macro trend. So we have a trend line, cool. We know that we should be looking for an M at the end of the bull trend, and there's no M. Therefore, asking the relevant questions. I have just figured out the answer to my first three questions. Is it a reversal? No. What is the direction? Looks like it's up. How do I discern that it's going up? I just answered the question by virtue of it's not a reversal. So just like that, I have more or less figured out my directional bias. Simple, right? I now need to figure out if I have entry. I now need to figure out if I can execute upon this position. Now, spoiler alert, I did lose this trade, but not because I was wrong. It is because the trade actually went in my favor. I called this trade out. I did actually say that this is what I wanted to see, and I called this trade out, and it did actually do what I wanted it to do. It just didn't do it for as long as I wanted it to do it for, but it did actually give us profit. Now, what is very interesting, the same way how I have asked all these questions of the market for my directional bias, I'm going to do the exact same thing for my entry. So looking at GBP/JPY, you can tell that it's bouncing off of the trend line. So if this were an M pattern, it wouldn't bounce off of the trend line. It most likely would be a reversal and break straight through because it's going for the liquidity of these other zones, these liquidity pools. Looking at GBP/JPY right now, the moving averages have not crossed, which means they haven't told me at this point that GBP/JPY has shifted back into bullish momentum. Therefore, I cannot buy it just yet. But then, if we wait just a little while, that exactly happens. Now, for those of you who know me, you all know that I trade, I buy sell candles and sell buy candles. So because at this point now the moving averages have crossed, this is the creation of my ECR, which tells me that yes, momentum has shifted back into a bullish direction. So I might want to consider some buys. So looking at it, I cannot buy it just yet because I don't buy candles. If I buy here, it means that if the next candle opens red, it can give me drawdown, which exactly is the case. If I bought here, this one trade right here would give me, entering on this one candle would give me upwards of 6 pips of drawdown. So that being said, I don't want to buy this candle. I also don't want to buy this candle just yet because there's not enough confirmation as of yet telling me that, yes, this is the candle that you want to buy. So let's watch and see what happens. Then the next candle starts to buy and then it's red again. Still not really giving me anything that I want to use. Yes, it looks pretty good. Yeah, you could probably chance it, but if you chanced it, you realize that now you're running the risk of more possible drawdown. And as you can see, that's exactly what happens. If you did buy any of these red candles, look at what would have happened. With a 10 pip stop loss, which is what I use, you would be taken out by this wick. So I'm waiting and I'm asking the relevant questions. I'm asking the question now, what candle is the best potential candle that I can get in this situation that's going to advise me that I should enter in this point? So I'm watching. That candle doesn't really tell me anything. It's also breaking the EMAs, so I can't enter there. This candle is beneath, it's underneath, it's beneath the EMAs, so that's also a problem, and it's, wicks to both sides. But then this big candle comes up. Now I can't enter this because it means that if I enter here for buys, this is 10 pips of drawdown here if the next candle is to open red. And so said, so done. Now, granted, it does not necessarily give me it wouldn't hit my stop loss, but it's definitely not the best of candles to enter on, I would advise. So I'm definitely waiting. It starts to go into bullish momentum, and now looking at it, it now starts to tell me that yes, the momentum looks pretty much bullish. So I might want to try to get in as soon as possible, but I still need to wait for the proper candle. So this candle looks pretty good. It's not an engulfing candle. It's not it's a rejecting candle. It also is a break and retest candle. As you can see, this is your zone here. It broke the zone and then retested. But I feel like maybe, just maybe, you might want to give it just a little while, one more, maybe 2 more candles. And so said, so done. If you were to buy this candle, right, granting the fact that the body of this candle actually said that there was a lot of bear momentum, if you bought this candle with a 10 pip stop loss, you would be taken out by the next one. But what I did is I actually waited. And when I saw this candle, if you realize what it looks like, when I saw this candle, I was like, yep, that's the one. Because it's very close at this point to the retesting zone, the break and retest. It is a retesting candle. It's a smaller body telling me that the bearish momentum isn't as strong. It's rejecting the downside, and it's giving me a pretty good entry. It's not breaking my EMAs. Everything about this says possible buys. So that's exactly where I buy. I'm asking the relevant questions, and the market is giving me the relevant answers. Let's see what happens. The very next candle is more or less, at this point, look at my drawdown on this trade. 3 pips of drawdown, max. And after that, it never came back. Going over, literally over 60 something pips in my favor. And by this point in time in the trade, I'm actually sleeping. This is very late Asian. I'm actually sleeping by this point. And the trade actually does hit about 60, almost 60 pips of profit. Say about 58. There's a 1 to 6, give or take. And yeah, eventually it actually comes back down and takes me out. In my sleep, I wake up somewhere around here. No, sorry, I wake up somewhere around here, right? Naturally around 5:30, 5:15, somewhere there. And I wake up and the trade has already taken me out, but not before it has actually given me 1 to 6. Am I salty about the fact that it lost? Not particularly, because I knew that I was absolutely correct. It just means that my timing maybe was a little bit off. That's fine. You're going to get that. Can't really run away from that. I was still absolutely correct. I'm going to get other trades like this because I do this quite frequently. Now, looking at it, if we pay attention, it's actually right back up to the zone again. Now, what you can start to look for is it rejecting the zone? Is it obvious? If let's just say maybe the trend has changed. It's not necessarily, painting to me at this point. Actually, no, looking at it, it might be a possible reversal, but in order for this to be a reversal, I would need to see this. That's what I need to see, a sharp shift into this area and then back out almost immediately. And then the ECR would then come in, and then you get your retest, and then it goes down. Other than that, I'm not even going to touch this. I'm not going to consider buying it nor selling it. I'm just going to leave it alone. But I am trying to show you here, one, I would have lost this trade even though I was absolutely correct, and nothing is wrong with that. You're going to get that sometimes. But what the point of this exact video is, realistically, is to get you to ask the relevant questions. It's not about trading a candlestick pattern. Nothing about this, what I did here, was a candlestick pattern. I was asking the right questions. Which candle is the best candle at this point in time, looking at all of the different criteria and rules and things that are happening around me, following the surrounding market structure to try to see if I can use the best potential candle to enter on. And that I did. That candle literally gave me, and I mean, look at it here. It literally gave me 3 pips of drawdown. 3 pips of drawdown with a 10 pip stop loss that went 6 times my risk before coming back to take me out. Meaning if I was awake and I needed, let's just say at this point I decided to put my stop to break even. If I was awake, I'm telling you, I most likely would have been taken out at maybe 2 or 3 pips before it would have taken me out. I'm cool either way. The fact that it took me out, it means that I was wrong about the overall direction at this point in time. It just means my timing was off. That's it. So I want to urge you, anybody who is listening to this and anybody who got this far, I want to urge you to, instead of trying to trade candlestick patterns, try to learn and understand how to ask relevant questions, because the market has no choice but to show you its hand. It's like the market is playing poker with you, but they're showing you, instead of looking at their hand and hiding their hand from you, essentially what they're doing is they're showing you their entire hand at all times so that you know what you're working with. The market has no choice but to do this. So I hope that you learned something, that you grabbed something, and that it made some sense to you so that you could, actually try to apply this and learn and use this in your own trading. It's a very powerful technique once you do understand how to ask the relevant questions. So yeah, I really hope that you can apply it in your own trading. Other than that, if you have any questions, again, don't be afraid to reach out to me directly at Ikata Trading on Telegram, Instagram, TikTok, or you can even comment here on YouTube and I'll try to respond. If you liked the video, hit like on the video for me. It does help the videos a lot. Comment below, what do you think about this? Do you think that this is a interesting way to approach the market? Do you think that it makes sense or what I would have said, or do you think that it's stupid? Be honest. Tell me, what do you think? Tell me, am I wasting my time by asking these questions, or do you think that it actually has some merit behind it? And last but not least, I would ask you as well, if it is you like this kind of stuff and you feel like it made some sense to you, hit subscribe. I do this quite frequently, or I try to do it quite frequently. Hit subscribe, ring the bell so that you can know when I do post videos like this. I do try to do it quite frequently, as I would have mentioned. And yeah, other than that, I really hope that you have a good rest of your day, and I will see you in the next one. Peace out, guys.